Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Bob Iger just sent an email out to Disney employees saying that layoffs were going to go into effect this week at Disney. About 7,000 people are going to be impacted. This is something that we knew has been coming for a little while now. Disney's really starting to restructure itself around the streaming business and what the future of this media business looks like. And some of what Iger is doing is really undoing some of the structural changes that Bob Chapek put in place. But I did want to cover this layoff announcement and what it means for the company's operations and investments going forward. My name is Travis Hoium. Thank you for watching Rive Investing. Please subscribe here on YouTube for all of my content. Let's start off with the letter that Iger sent to employees. And this is some screenshots here. Dear fellow employees, as I shared with you in February, we're going to be cutting 7,000 jobs as part of a strategic realignment of the company, including important cost-saving measures necessary for creating a more effective, coordinated, and streamlined approach to our business. He goes on to give some details about how this process is going to play out. Notifications are going to be starting this week. And then in April, there's going to be another big round of layoffs. In total, that's going to be about 7,000 people. What's unique about this is that Iger is basically pre-announcing a large number of layoffs. So Iger has a long track record of success as a CEO, but I don't like the fact that he's leaving tens of thousands of people in limbo, not knowing if they have a long-term job at Disney or not. So I think that's notable in this announcement. He ends with this acknowledgement for people that are not impacted, that it's going to be a difficult time for Disney as the company goes through these structural changes, and asks for understanding and collaboration during this time. Like I said, this was not an announcement that we couldn't see coming and that employees weren't expecting. But the scale of the layoffs and the way that they're being rolled out over the next month or so is a little bit surprising for Disney, and I think shows just how quickly Iger was probably brought back to the CEO role when he came back. He's got about a 2-year runway here to implement what he thinks is the correct strategic changes. And that's the frame with which I wanted to look at these layoffs. If you look at the way that Disney has changed its business over the last few years, they're putting less emphasis on the cable bundle. They split off the ESPN business, which has really been the powerhouse in cable for the last 20 or 30 years. That really drug along a lot of the Disney content, which could then be bundled with ESPN and command a high price in that cable bundle. That then drove advertising revenue and really was the fuel behind the business. That's changed as Disney has started to invest more and more in streaming. Obviously, Disney Plus is a big success story. And then tack on to that things like ESPN Plus and Hulu. But that business model requires a different structure and a different content strategy. And that's really what you're seeing Iger start to put together is think about this as tent poles and filler content. If you're a regular watcher here of Rive Investing, you would know that I've talked about the smiling curve a lot. This is one of the concepts that I think the media business is going to go into right now, is that there's going to be tentpole content. So think Pixar movies, Star Wars movies and content, and then the Marvel films. That's going to be what's going to attract new people to Disney Plus and Hulu. It's going to be how the company makes its money at the box office, and it's going to drive that long-term value. But the filler content is going to be just as important, but that needs to be relatively inexpensive content. When you think about streaming TV, that's content like The Office or Friends. You don't necessarily sign up for a streaming service specifically for those pieces of content, but it's the kind of things you watch when you just want to put something on at night or in the middle of the afternoon. So that's the way that Disney is going to have to build out their content. A lot of companies are going through a similar strategic change where they're getting rid of the content that falls in the middle. Maybe the content that wasn't as profitable is not the kind of content that is going to get you to sign up for a streaming service and is also not going to keep you there once you're there. That type of content just simply doesn't have the same value when the economics change from a linear cable TV model to a streaming TV model. That's really the frame with which to look at these announcements. We'll see what the details are here, but after the most recent earnings call that Disney and Iger had with investors that was fairly quick after he was brought back to the CEO role, that's really what he started to lay out, was that the content business had to start living on its own. Managers are going to be making their own decisions for content, and then Disney is going to own those distribution mediums. But they're, as a result, going to have to live with the realities of the Disney distribution model, and that is primarily leaning on streaming and to a lesser extent leaning on those linear and cable networks. So big day for Disney. 7,000 people are going to be impacted. Definitely not something that any of us should take lightly. As investors, we need to think about how does this impact the company long term. I think these are the right kind of moves. It's not just about cost saving. It's about building the company into the strategic position that it needs to be so that it can grow long term and be a better company a decade from now than it is today. That's the way with which to look at these announcements, but definitely a sad day for Disney and the employees that are impacted. Thank you for watching Rive Investing. Please subscribe here on YouTube for all of my content, and I'll see you here next time.